Alrighty, ladies and gentlemen, we have a lot to break down in this episode of Stocks Talk Stocks, and we're going to start off the episode with what's going on in the stock market and what has been going on. We're going to quickly break down SPY, Triple Q, which track the S&P and the NASDAQ, and then we're going to talk about some stocks. We're going to break down what's going on this week in terms of earnings reports. We have Nike, we have General Mills. I know General Mills, they're not the most exciting company, but they're reporting this week, and there's some key data coming out which might not be as crazy as or as important as CPI, but it's, these are some key numbers coming out that I want to share with you guys that I'm looking out for. So if you all find value, hit the like button, subscribe, and if you want some free money from Moomoo, who doesn't like free money? You could get up to 20 stocks, each up to $2,000. All you got to do is use that link down below, deposit at least $100, and boom, you get the free money. It also helps out the channel. I appreciate you guys as always. Let me straighten this camera out a little bit. It's not too centered. There we go. Now, with that being said, cheers, let's dive into the video. So it should come as no surprise that the stock market did not do well last week. You guys probably saw that, right? At one point, SPY was trading at $414 a share, right? This was on the 13th of the month when that CPI data came out, right? And then it went all the way down to $380 to close off the week. So we were at over $414, and then we lost almost $35 of value. We're talking about 8% from top to bottom in less than a week, right? We're talking about 1, 2, 3, 4 days of trading, not 5, 4 days of trading. And during that same time period, Triple Q went down, let me see here, from, it's got to be worse than 8%, right? From $301 to all the way down to $272. We're talking a spread there of almost 9.5%. So the markets got demolished last week. You guys know that, right? Markets got destroyed, and Triple Q ended up falling under a key level, 278, 280, right around here. That was the low, not only from the end of November, but also in the beginning of this month, and we tried holding it. I believe this was on Thursday, but we failed. We fell right through it, and we got all the way down to 270. So we not only broke 278, 280, but we filled the gap down to 270, 272, which is a level I've been talking about on the channel. You guys can see here, if I zoom in a little bit, that was the high from the beginning of November. We filled that gap as well. So this week, if 270 breaks, whether it's on Monday, Tuesday, whatever day, I don't know. If it happens this week or at some point even next week, after Christmas, the following week, if 270 breaks, it's not going to be good for the bulls. Bad news, bulls, if Triple Q breaks 270. We're probably going to fill the gap down to 260, 263. Maybe it starts going 255, which if you guys take a look here, that was the low from the middle of October. That's where Triple Q got. So yeah, if 270 breaks, my take is, guys, in the short term, I don't know how long it's going to take, but at some point, we're going to test that 255 level. Maybe we even break that as well and hit a fresh low. That is definitely in the cards as well. And going back to SPY, let me show you the key level here that broke. It was 390. We broke under 390. We plowed right through it, which you guys can see 390, 392. That was support all throughout, the beginning of this month, middle of this month, end of November, right? So we broke right under that, filled the gap all the way down to about 380. If I pull the 4-hour up, you guys are going to be able to see right here, back in the beginning of November, roughly, we were at 380. So we ended up falling right under 390, filling that gap down to 380. Now, at this point, if SPY starts breaking 380, we have 375 followed by $368. This is where this could be going. So for this week, I'm going to set my alert right here. Mark is at or below $380 a share. Let me set that right now. So again, if this breaks 375 followed by $368, $69, that's where it could be going. Then if that were to break, if 369 breaks, we're talking 362, we're talking, $356, and then we have all the way down here the low from a couple months ago, which was $348 on SPY, which we're still a pretty decent amount off of that. Honestly, we still have, if this thing falls another 9%, that's when it's going to get to the low from the middle of October. And if Triple Q falls another, let's see here, Probably a little bit more than that, but let's see. 354 or 254 was the low. It needs to fall. Oh, no, less than that, rather. Yeah, less than that. It needs to fall 7%. Less than SPY needs to fall to get to that low, which makes sense, right? That makes sense. So, yeah, I mean, a couple more red days, guys, a couple more rough weeks in general. Another 1 or 2 rough weeks in the markets, and we could be at these lows. I'm not trying to be a bear. I'm not trying to freak all you guys out. I'm just keeping it real, setting levels on the charts here, and just being 100% upfront with you guys. I'm not sugarcoating it, right? Markets are hanging on by a thread right now. So this week, we have a lot going on. We have maybe not as much as last week. I mean, last week was a very big week. But this week, we have on Tuesday, building permits and housing starts for the previous month, which isn't, one of the craziest metrics that we have to watch out for. But with everything going on right now in the real estate market, and by no means am I a real estate expert, guys, but you guys know what's been going on. It's clear as day. You don't have to be a real estate expert to see this stuff, guys. The mortgage rates have been going up. There's less demand for houses. There's people that are like, wait a second, I have a mortgage right now for 3-4%, less than that even. Why would I sell this house right now and go to a different house and then automatically have a way higher rate? Because you can't just transfer your mortgage. I mean, maybe in some countries you can do that, but in the U.S., you can't do that. So a lot of people are just staying put. And the data here shows that building permits have fallen month over month. 1.48 million building permits were issued in the past month, which is annualized. So whatever that is, divided by 12. Do the math, guys. 1.48 million building permits in the past month. And the previous month before that, 1.51 million, roughly 1.51 million. So it's not a huge, drastic decline yet. And let me actually pull up the chart. You guys are going to be able to see what I'm talking about. So you can see the chart right here, guys. If I zoom in a little bit, you're going to be able to see it. It's not a huge decline from the last month. But it is coming down. And overall, building permits, you can see here on this chart, this whole entire year they've been coming down. We saw in the beginning of the year, it was right around, January, February. That's where it peaked, right around 1.9 million building permits, right? That's annualized. Again, you got to divide that by 12. So it's been coming down all year. And the way the trend's looking, it's going to continue coming down. And believe it or not, even though it's been coming down, the building permits are still above pre-pandemic levels, which were right around, honestly, where they are right now, 1.5-ish, 1.48. So, yeah, building permits, 1.48 million annualized. That is down from the previous month, but not too crazy of a decline. And if I come down here a little bit, we can see housing starts. This number shows the annualized number of new residential buildings that began construction during the previous month. You guys see that right here, right? And if I pull this up, well, first of all, the number was 1.4 million. That's annualized. And the month before, it was 1.43 million. So that's come down just a little bit here, month over month. And if we look at the chart, and if I zoom in a little bit here, you're going to see in the past couple of months, throughout maybe not the entire year, but since April, that's where this peaked. Since April, you guys see it right here. It was 1.75 something. Yeah, 1.75 million housing starts in April. Now it's 1.40. So it's come down a good amount. Not too crazy, but a decent chunk at that. And we can see here back in 2020, I mean, holy smokes, look at that. Back in 2020, we were at 1.56 in March. That's 1.56 million. Then once the shutdowns hit, once the economy got shocked, this went all the way down to May 2020, 0.84. That is insane. That under a million, 840,000 housing starts in May 2020. Then obviously it got back to normal. That was a short-term shock. But overall, look, the decline is here. And I do believe, by the looks of it, a continued decline could be in the cards. And that is a sign that, A, the economy is weakening a bit. B, consumers are not willing, like I said before, to jump from this house to that house. Why would they? Rates are higher. Their payment's going to be higher. They're going to stay put. So that's really what's going on at this point, from my perspective at least, and it's reflected here in these housing start numbers, building permit numbers. So we'll see how this, materializes over the next couple of months. I'm going to be watching it on the channel here, so make sure to subscribe. If you guys like this type of content, make sure to subscribe, hit that notification bell. Now let's talk about some stocks. So we don't have the most exciting companies reporting earnings today. I'm not even going to lie, guys, but there are companies that, we still have to talk about. Well, these first two are pretty exciting, I'm not going to lie, but after that, it gets a little bit boring. But we're still going to break these companies down, so let's just do it. Let's just do it, guys. So Nike is number one. Nike, which this company is pretty exciting. They're reporting on, let me see here the date. They're reporting on, We're going to break down a bunch of estimates too, guys, numbers, what their numbers could be looking like here, and these are just estimates, so keep that in mind. On the 20th, which is on Tuesday, Nike is reporting, and they're looking to do $1, actually less than $1, 65 cents in EPS on revenue of $12.56 billion, which would be up, if that does come in around 12.5, that would be up roughly 10.6% year over year. Not too bad. And we can see that the stock has been digging its way out of this hole. It was $82 a share. This was back in the beginning of October, and now it just hit over 100 as of the past couple of weeks here. It actually got all the way to 115 bucks as of a couple trading days ago, and now it's at $106. It has pulled back about 9% in just the past couple of days, as you all can see here on the 5-day, 5-minute chart. 1, 2, 3, 4 trading days in a row, pretty much of selling. So at this point, going back to the 4-hour on Nike, I'm very interested here if it's able to hold above this 180 moving average, whether it be 100, 102, 105 bucks a share, right around where we're, where we're about to test right now. This is very big for the bulls, right? If bulls fail at this point, all right, we're probably going back 95, low 90s, maybe back to the 80s, but this is the last fighting chance for the bulls, right? We're about to test the uptrend, and we have earnings coming up. This could be setting up for a nice play. It could be, but for me, I'm going to wait until after earnings, see how the earnings look, guidance, EPS, revenue, how the stock's digesting the earnings, and then I'm going to see how the stock is reacting to the earnings, right? And then we'll see what happens from there. I'd like to play it again from $100, $105. Maybe we get the bounce, it starts going back towards the 110s. That's where there could be some money made here on Nike. But with earnings, again, the way I look at stuff, guys, these days, trading wise, I'm not gambling around earnings. I used to do that years ago when I first started trading. Now it's just I don't do that anymore. I'm playing it safe. So I'm staying away from that, but we'll see. After these earnings come out, it could be opening up as a play. So the next one, which is also pretty exciting, not the most exciting, but it's a big company, very important company. It is FedEx, ticker symbol FDX, which this company has just been going through the ringer. The stock went all the way to $141 a share a couple months ago. That was a 30% drop for the stock. And if you guys don't remember, last time they reported earnings, before that, a couple days before the last earnings, they issued a warning. If you guys remember, right? The stock tanked. It went from 200 to like 160. Earnings came out, then it went all the way to 140. So this thing got destroyed in the span of a couple of weeks. It went 35% in the red, and it's been clawing its way out ever since. Kind of like Nike, but this even started, I believe, before Nike, reversing before Nike. This thing went from 141 bucks in the end of September to where it is now, 171 bucks. It is up about 20%. So FedEx is reporting earnings, I believe, on Tuesday as well. Yeah, Tuesday after the bell, and they're looking to do $2.83 in earnings per share on revenue of $23.74 billion estimated, which would be up a whopping, are you ready for this? 1.1% year over year. So, hey, if they do 23.7, they might be growing, but I would not be surprised if they report numbers where they're declining year over year in revenue. I would not be surprised at all. So keep that in mind on FedEx. And again, they're on Tuesday after the bell. And as of now, if we're looking at the really short-term trading, what's been going on the past couple of weeks, seems like FedEx has been stuck between these two levels right here, 168, 170 bucks to about 180, 82 bucks, right? This little $13, $14 window. Let's see what direction it picks from here. If are we going to get a bounce off the 180, which right now we're holding that on the 4-hour chart? Maybe we start making a move back towards $175, $180 a share. Keep your eyes on FedEx, guys, and General Mills. I know it's not the most fun company out there, but it's, that the thing about stocks, guys, it doesn't have to be. Boring is better. And you look at General Mills on paper without even looking at the stock, and you're going to be like, General Mills, what a crap company. Oh, they're so boring. What do they sell? Cereal? Is that all they sell? But if you look at the stock price, This thing has been on fire. It's a stealth. It's been in a stealth bull market, like a lot of stocks that we've talked about on the channel. We've pointed these out before. There are stocks these days, guys, that are doing well, that are under their radar. This one's one of those. It's a bigger company. A lot of people know about it, but it's one that if you ask your average retail investor, I'd say, how do you think General Mills is doing? They would have no idea, right? They'd have no idea for the most part, I'd say. But either way, it's gone from $65 to now $86 in the past couple of months. It is up over 30%. And if we look at the max chart, is this near all-time highs? Yeah, it's at all-time highs, guys. This is unreal. Last week, it hit all-time highs. So General Mills is looking to do $1.06 in earnings per share on revenue of $5.19 billion, which is would be up about 3.4%. So not crazy growth. You're not going to be getting crazy growth out of a company like this. But what do you get out of a company like this? It's more of I'd say a defensive investment, right? Which is why probably a lot of money's been going into it. And I personally wouldn't chase it with earnings coming up here on the 21st, I believe. No, they're the 20th on Tuesday morning. So they're a morning earnings report. I wouldn't chase it here because it's almost like it's priced to perfection, right, guys? And when stocks are priced to perfection, for me at least, I don't like chasing them, especially heading into earnings, because if these earnings disappoint, sure, the company's been crushing it, but if the earnings come in a little bit soft or maybe guidance isn't as great, we could easily see this thing come down towards 80, 81, 82, no doubt. And if it does come towards that 180 SMA on the 4-hour chart here at about $80, that would be where I'd be watching it very closely here at this point, right around $80. So yeah, I'm not chasing it. I'm going to set my alert at about, let's say 85. Mark is at or below $85, and we'll see what it does from that point. And if you haven't gotten your free stocks from Moomoo yet, what are you doing? Use that link down below, deposit at least $100, and you could get up to 20 stocks, each up to $2,000. And if you want some more money, some more free stocks, who wouldn't? 12 stocks from Webull as well with any amount deposited. All of those are linked down below. And just know, guys, all those links help out the channel. Cheers. I appreciate you guys as always. And now let's talk about some more stocks. So we also have Micron this week, which I believe, wasn't there a big investor recently that started buying Micron? Man, it's slipping my head right now. I think one of the big guys, Monish Pabrai, maybe I'm wrong on that. I could be wrong on that. But either way, Micron, and by the way, just because somebody's buying something does not mean you got to go buy it. Please don't do that. Don't just clone shit, what's the word? Don't just blindly clone these investors. I mean, you could, but you don't know what's going on in their heads. You don't know what they're thinking. So keep that in mind when making your own decisions. Little side point here. Micron's reporting this week on the 21st, which is on Wednesday after the bell, and they're looking to do 0 cents in earnings per share, so flat on the dot, flat on revenue of $4.12 billion, which would be down, get this, guys, 46% year over year, which is just unfreaking believable. So yeah, semiconductors have not been doing well at all. You guys know that. Mr. Buffett, he bought TSM, right? He bought some Taiwan semiconductor. I think it's Monish Pabrai buying Micron. Who knows? Maybe there's some other ones. I forget. Either way, a lot of these big guys are buying these beaten down semiconductors. And for me, I'm not going to not shamelessly clone them. Why do I keep thinking shamelessly? Should I go watch Shameless, guys? I freaking love that show. Maybe that's why. I haven't watched that show in a long time. Maybe my subconscious is telling me to go watch Shameless. But blindly, yeah. I'm not going to blindly clone these investors, but if I were to make a play in the semiconductor space, like I've talked about before on the channel, I'm going SMH all day because this is the semiconductor ETF. It is a basket of these stocks, right? And I've mentioned, owning Nvidia in the past, wanting to own the stock, but it's just ran away so much for me at this point. I don't know if it's ever going to get back to where I'd want to buy it. We'll see. So I might buy Nvidia potentially if it gets to the right level, but I'm leaning more towards SMH if I were to make a longer term play on the semiconductors. So yeah, Micron's this week, guys. Keep your eye on that one. It's on Wednesday after the bell, and it's been in a downtrend, and if they drop the ball here, this could be vulnerable to a drop, probably under $50 a share. So keep that in mind on Micron. We also have CCL. Let's pull that up. Carnival Cruise Line. They're reporting on the 21st, which is on Wednesday Wednesday in the morning. And this stock has just been through the ringer, guys. If we look here on the 3-year chart, this thing went from, you guys know, it crashed during the pandemic, $50 to $8. It ran back to 30. Now it's back to 6, or well, it was at 6. Now it's at 8. So it's not like the post-pandemic has been going as well as they plan, at least for the stock price. I mean, a lot of people thought, oh yeah, Carnival Cruise Line, they're just going to bounce back, right after a year after the pandemic. And it's been almost 3 years. I mean, almost two and a half years, whatever it's been. And Carnival Cruise Line the stock has just not come back at all. And with that being said, guys, their revenue has come back a decent amount. I mean, look, revenue's estimated to be $3.91 billion. That's going to be up 200% year over year, but it doesn't matter. At the end of the day, sometimes stocks just don't come back. Sometimes there's just too much risk. I just don't know. I mean, this stock, you'd think it'd go back to where it was before the pandemic, the old normal, right? But there's a new normal now, and the new normal might be where Carnival Cruise Line, the ceiling is at $15. That could be the new normal. $20. That could be the new 50 from a couple years ago, When there's these drastic events that happen to these companies, sometimes they just don't get back to where they were. Kind of like the airlines in a way. You could make that argument, right? It's just a new normal, and who knows if it gets back. I mean, I don't know. I don't know if it ever gets back over $20 again, to 50. I mean, that's a little bit stretched at this point, in my personal opinion. So Carnival Cruise Line, keep your eyes out on it for this week. We also have Rite Aid, which has just been destroyed. I mean, this company, I feel like I only talk about it when they report earnings, and now that I'm looking at it, I remember last time they reported, this thing went from $7 to about under 5 in a day. That's a 30% drop. So this thing got destroyed a couple weeks ago, or that was like 3 months ago almost. Yeah, so they're reporting earnings here on the 21st, so on Wednesday in the morning. So watch out for RAD. They're looking to do negative 31 cents in earnings per share on revenue of just a little bit under $6 billion, which would be down 4.7% year over year. And the last stock for this video, guys, is CarMax, ticker symbol KMX, which this stock's been destroyed recently, and their earnings are not expected to be that good. EPS is looking to be 72 cents, which is down massively from the previous couple quarters, and revenue is looking to be $7.38 billion, which would be down 13% year over year. So a lot of these companies, except for Carnival, and Nike, a lot of the companies we talked about today, they are expected to be down year over year on revenue, some way more than others. Micron's 46% down year over year. That's awful. So CarMax, I mean, this company, it's going to be another one that's struggling. It might even be worse than $7.38 billion in revenue. That it might be down 20% year over year for all we know. So yeah, these are stocks that I'm looking at, guys, and kind of some thoughts throughout the video on kind of what I'm looking to do. Just my thoughts on the markets, right? So if you guys enjoy the video, all I ask is for you to hit that like button. Feel free to subscribe as well. Well, maybe there's some more things I'm going to ask from you. If you want some free stocks, hey, if you want some free stocks, use those links down below. You can use the Moomoo link, deposit at least $100, and you can get up to 20 stocks, each up to $2,000. And if you want 12 more stocks from Webull with any amount deposited, and feel free to check out my Patreon as well. All those, again, are linked down below. And with that being said, cheers, guys. Peace out.